Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to cover the differences between having a higher purchase price and a lower interest rate versus a lower interest rate and a higher purchase price, especially when it comes to making your monthly mortgage payment and what the difference is, if any. Okay, so before we actually get into the topic, I do want to highlight this study, a little piece of this study that was done regarding the buying habits of millennials when it comes to home purchases. So one of the things that I want to that stood out to me is that it says 1 in 7 millennials would offer $100,000 or more over asking price for their dream home. So many millennials, or a good number of millennials, are willing to overpay for real estate. And when it comes to our group, and if you've listened to any of the previous videos, one of the things that we emphasize is that we have to, in order for us to make money as real estate investors, we have to underpay. So, for example, if we have a home, in order for us to make money, we probably need to pay $100,000 less than market value, which is common for our in our real estate investing group. So, I'm going to cover two scenarios. Now let's go into the topic. Um, we have two situations. So situation A is let's say you have a $300,000 loan. So you bought a property, you have a $300,000 loan at 3% interest rate. The monthly payment will be $1,264.81. And then you have situation B, which is $210,000 and 960 $210,960 and at a 6% interest rate, which will also produce the exact same monthly payment. So the question is, which one is superior, especially as a real estate investor, situation A or situation B? And we'll just give you a little bit of time to think about that before I give the answer. Now, one of the things that you do want to do is just always verify if this monthly payment is correct, and you can just figure it out by going to Google. So I have already Googled these two situations. So just type in mortgage calculator in Google, $300,000 loan amount, 3% interest, and Google does round it. So that's why it's a little bit off here in Google. And then I'll go to the next one, which is $210,000 at 6% interest. And then the monthly payment is $1,265. So the monthly payment for these two situations are exactly the same. And a comment I want to make is that it's that the average American would probably uh, tend or lean towards this situation. Um, so even though the purchase price is higher, just as long as they can make that monthly payment, that's really all that matters. Okay, so now I'll give you the answer regarding the two situations. A lower purchase price is always superior than a higher purchase price given same monthly payment. So let's say you won the lottery today and you're able to pay off your house tomorrow. If you are in situation A, you've essentially overpaid by about $89,000, right? Whereas if you're in situation B, you've pretty much saved $89,000 because all you have to pay is 210. So if so, one thing I do want to mention is, let's say these two loans are actually reach the 30-year term for the 30-year mortgage, like you paid every single month for 30 years, then the two outcomes would be exactly the same. But if you have the ability to pay off the loan early, then you'll save a lot more money because all you have to pay theoretically at the minimum is this purchase price. So I would think of it like this, that the purchase price is mandatory and then the interest is optional if you have the means to pay off the purchase price early. So just so think about that. Now, let's say we didn't win the lottery, but we have another way of paying off the home early. So if you have not watched or not familiar with the concept of velocity banking, I'll put a link to our velocity banking videos in the details description below. But basically, we have this awesome method called velocity banking that allow us to pay off our home early or much earlier than 30 years. And if we apply it to both situations, we can see that which situation would come out on top. Okay, so I have this velocity banking calculator right here. I've pre-filled some of the information. So $300,000 balance, $300,000 balance, 3% interest rate. We have that payment amount. We're going to use a line of credit. We have a budget here, and that's really all we need to figure out how much it's going to take to pay off the loan using Velocity Banking. So as we can see here, it's going to take us 5.6 years and $29,000 of interest to pay off the loan. So let's just do this. So 5.6. So let's say VB, Velocity Banking, 5.6 years and 29,000 in interest. Okay, so we have that here. Okay, so now let's put in the second situation, which is this 210,000 amount. Okay. And 6% interest rate, and see how long it takes us. So this is going to take us 4.1 years. So VB, 4.1 years. And then we pay $29,000 in interest. So it's mostly the same. I think there's a slight variation. Actually, let me just get an exact figure of the amount of interest here. And we're going to put in 3, so 29,864. Okay, so comparing these two situations, it seems like a higher purchase. So we're going to pay pretty much about the same amount of interest. This one will be slightly lower, but the amount of time that'll take us is 5.6 years. And here it's going to be a lot quicker. So the total amount that we would pay in situation B or A is 329,000 because we have to add the purchase price and the interest. Where in situation B, it'd only be 210 and 29. So that would be about 240,000. So as you can see here, would you rather pay 330,000 or 240,000? I would certainly pay the lower number. So even if you, let's say, didn't win the lottery, but you used Velocity Banking to pay off the loan, you can clearly see that this situation is much more superior than situation A. So that's why we always emphasize that we buy properties at a discount, and it's a much better situation than, let's say, overpaying for the property and only thinking about the monthly payment, which is what the average American will do. Okay, so this is Crane Atlanta Mentorship. If you're interested in joining our group and learning more about what we have to teach and you're interested in mentorship, please go ahead and click the Google form link below on the details page or the details section of this video, or go ahead and email us at the About Us section on the YouTube channel. You can find our email address there and just say, hey, I'm interested in being mentored, and we'll give you a contact and set up a time to have a one-on-one Zoom call. All right. Have a great day, everybody, and we'll speak next time.